And welcome back, everybody. Market update video early in the morning here on Monday, May 30th, 2022 from the concrete jungle. Happy Memorial Day to those of you in the United States. Wanted to do an update, kind of provide some perspectives on the market as I see it. After having heard many competing narratives out there about which way the market's going to go, whether this is the macro bottom, whether this is going to be a relief rally, followed by more severe downside, prolonged, protracted downside. So whenever I sort of hear this and I'm starting to feel uneasy, I just always try to fall back on the charts, and specifically classical charting, and force myself to just clear off all of the drawings, all of the indicators, all of the moving averages, and just try to interpret the what the market is trying to say, and to the best of my ability, using just trend lines, classical charting, and patterns, and hopefully to help myself manage my risk. And so let's get right into it. So Bitcoin again, had multiple retests of this sort of support line, and of course the sort of the double top formation from 2021, and then a break when we started hearing a lot of the narratives change to convincingly bearish. I think most of the sentiment is agreeing that it's a bear market, and so again, to have an idea of the downside risk, I do like to use a measured move of using the height of this price pattern and project it from the breakdown point to get an idea of if this pattern does confirm, where might be sort of that target, if you will. Here, as low as 16,000. Now, I don't know if it's necessarily going to achieve that target, but it does give me an idea of the market structure and the possibilities at hand. When we turn on the 200-week moving average, it does pierce quite a bit below that, which is about the 22,000 level, which itself is not that far away from the previous all-time high of 19,600. And so, we'll just have to see, right? In the short term, it's not uncommon for these sort of neckline or trend lines, once they're broken below, to be retested from below and either rejected and continued downwards, or penetrated for a bit of a whipsaw, or penetrated above and made as support again for a true whipsaw and a failure and continuation upwards. So all of these are possible. Given macro and monetary conditions, I think the more probable scenario, again, not financial advice, would be some sort of downside or at least sideways action. But it is good to keep in mind all of the different ways that we might be surprised, or that we might be invalidated, right? And that's what the power of classical charting allows us to be on the lookout for, right? What we expect to happen, what we think is most probable, but also what would be what the price would do to show us that we're wrong, right? So that's where charts for me really are very helpful. Bitcoin dominance, certainly secular long-term trend has been in a downtrend. If we sort of zoom in to the short term, and especially in recent weeks, as the overall market has sort of turned down, we have seen Bitcoin dominance, head a bit higher, and we can imagine a break of this sort of triangle, whether you see it as a symmetrical triangle as here, or perhaps a descending triangle as in this situation. It does appear to have broken above. Now, again, could it come back and retest and make support? It's possible, and continue up from here. I think that's the more probable scenario. Of course, to invalidate that would be, a breakdown back into the triangle for a whipsaw. But, if the dominance does continue higher short term, which I think is more probable, based on the height of this triangle and measuring it, projecting it from the breakout point, it wouldn't surprise me to see Bitcoin dominance pull up to about the 52.6, 53% range, which is kind of in that 100-week moving average and getting to that 200-week moving average for the dominance. So if such a move were to be realized, what would that imply, right, about the money flow and the market caps? Well, the Bitcoin dominance is the percentage of the market cap that is in Bitcoin within crypto, and so generally in bear markets, the Bitcoin is being sold for U.S. dollars, but not at quite a rapid clip as, say, some of the altcoins, right? So the more speculative altcoins are going to be sold for U.S. dollars more rapidly and with greater force. And also, not only that, the altcoins are going to be converted back into at least the relative perceived safety of Bitcoin. So both of those factors contribute to an uptick in Bitcoin dominance during bear cycles. So what this is telling me is that, at least in my personal situation, that the altcoins are going to pose a significantly outsized risk relative to Bitcoin, or of course cash, but certainly relative to Bitcoin. Should such a move be realized in the short term, and so personally, I unloaded a lot of my altcoins, before, sort of maybe during this range here, but certainly, now a lot of the altcoins we've seen already corrected 80, even 90% or more from here. And if such a move in Bitcoin dominance, the upside were to happen, another significant leg down could occur in the altcoin. So something to keep an eye on for sure. As far as Ethereum, we saw from sort of that March 2020 low a massive move, certainly against the U.S. dollar from let's call it $88 up to 4,080, and definitely outperformed Bitcoin during that time. But over the past year or so, has developed a rather bearish-looking chart pattern, which I think amounts to a head and shoulders. And hopefully I'll convince you of that, at least, based on how I see it. So we have a trend line or a neckline which has multiple touches. So we'll say this is one touch, or two touches, three touches, and then a break below. And as far as the sort of structure on top here, we have, imagine a left shoulder, a head, and a right shoulder, right? So, again, we can use price projection to get a sort of a rough idea of where the price might want to go, measured from the breakdown point. And when we do that, we get about 1,000, 1,060. So that I think is not an unreasonable area to look for. Should the breakdown be fully validated, and continue. Again, not to say that a relief rally couldn't happen to the neckline, which oftentimes does happen. Before continuing down, or even a slight penetration. Now, of course, the invalidation case would be if it were to recover above and then form the test the neckline as support and move even higher, right? So that's sort of the invalidation thesis. But personally, I'm looking at I'm looking at this potential downside risk and have positioned accordingly, for that. And just to look at Ethereum to BTC again, so sort of putting all those previous charts together. So again, from the sort of March 2020 or 2020 2019 area, we saw Ethereum outperform Bitcoin by, let's say, 400%. So a massive move against the dollar, and pretty good outperformance against Bitcoin. And over the past year or so, it's actually held up pretty well in terms of the ETH to BTC ratio. But until recently, right? And we can sort of imagine again this sort of support trend line being tested once here, twice, 3 times, and then a breaking below. And not sure if this is sort of more of a rounded top or just even like a triangle or something like that here. But in whatever you want to call it, it did break below this, what I think is a valid trend line. And so if we were to roughly get an idea of, again, ETH to BTC, in ETH to BTC terms, a measured move projection down to about 0.04, from the 0.06, that's about a 30% down move from there. And it does, if we sort of go back historically, back to this sort of longer term trend line, we do see it sort of X marks the spot there. So I think this is the more probable scenario. And again, for ETH to sort of break down against Bitcoin for at least the short term, shorter term, again, a retest of the former support, now resistance, before continuing down is my sort of base case. A break above or continuation higher would be the invalidation in that case. But again, not financial advice, but just sort of an idea of what the charts are telling us in terms of what ETH might want to be doing against Bitcoin, in the coming weeks to months. And sort of along the theme of altcoins against Bitcoin, right? So I chose this one, Hex, as one, not to try to, FUD Hex or to be anti-Hex, but again, just as an example of an interesting chart and an example of an altcoin, in the market. And, it's impossible to deny that the asset made a massive move against the U.S. dollar, right? 22,930%. From the bottom, right? Since that top, which, I have to say, not any one person in particular, right? But, a lot of folks, including the founder of the coin and a lot of folks who supported it were sort of saying that, because the new project, Pulse Chain that's coming out or, supposed to come out, and you're going to get your free snapshot of coins on whatever you held in your MetaMask during that time, right? So they were saying kind of hold your coins so that you get your free money when the snapshot happens. Well, to my knowledge, it hasn't happened, and sort of look where we are now, right? So, again, not picking on any one person in particular, but more to illustrate how powerful the charts are in terms of, well, if you hear a narrative, let's take a look at the charts, right? Let's see if the charts back that narrative up or completely turn it on its head, right? So that's why, and it's okay to go to YouTube or Twitter or whatever to try to get some information, but at the end of the day, it's going to be you making decisions for you or for your family, and it's going to come down to if you sort of listen to an influencer and they tell you to do something and you listen and end up getting wrecked based on that. Yes, it's intellectually expedient to sort of say, well, gosh, they got me wrecked, right? They were the ones that are responsible for my condition. But it doesn't change the fact that you got wrecked, right? So, and not everyone's going to be technically inclined, but for me, I always fall back on the chart. But I found this to be a very cool chart pattern. It's almost this sort of descending wedge formation as it sort of consolidated here, and I think with this massive wick sort of in the middle of the night, and it was immediately sort of bought back up, but I think this chart pretty much tells the story of which way this wants to resolve, right? I mean, again, unless it is a whipsaw and comes back up and recovers and comes back into this range and goes back to all-time highs, right? I mean, that's always possible. But based on what I'm seeing here, I mean, this is like a beautiful retest of the underside of this trend line. And my base case, again, not financial advice, right? But coming back up here, and for possible rejection, and when I look at where the support is for if a downside move were to be further downside were to be realized, it's really not that much support here until you get to sort of this congestion area at between, like, let's say what is that, like 0.7 of a penny to 1.5 cents, right? So that's kind of scary to me. And then another thing is, if you just do kind of that measured move, I see this as sort of like a 3 cents kind of a measured move. But how the price interacts with that measured move, I have no idea. So I just thought this was a cool chart, and also a nice example of how the chart really overrides the narrative, in my opinion. So just a couple charts in macro and equities. Mentioned this on a previous video about how I was kind of following the U.S. 10-year Treasury Note Yield and potential reversal after a multi-decade secular downtrend. And here, what we have here is the monthly chart and the 200-month moving average. So, this sort of chart of truth, as some like to say, has been, never been invalidated, right? Until sort of recently, it's poked above this 200-month moving average. And sort of when you drill down here, just a really cool example of how spotting these classical charting patterns can be really, really powerful. Right, and with classical charting, you don't necessarily just have to chart prices. You can chart yields. You can chart really anything, and the same principles of technical analysis still apply. But I just thought this was really cool that we had this significant, I think, very significant neckline, which was support turned resistance, to then form the left shoulder, the head, the right shoulder. And then perfectly, it broke above, and then perfectly tested it before being made as support, right? In this case, and then heading higher for the yield. So again, if we let's say do a measured move, right, from the head and project that from the breakout point, I mean, based on the chart, personally, I have to be prepared for the 10-year Treasury to head up to 6% based on this, right? So, a lot of the narratives are saying that that's going to be an untenable situation. It's impossible, right, given how large the national debt is. But to me, this chart is saying otherwise. And so, but one thing I think that is interesting is if we go to the shorter time frame on the daily, I do think we have a bit of a short-term reversal, potential reversal, right? It hasn't quite been validated here. Let's see. Actually, if I do something like that through there, perhaps, let's say, you know, or you could do this as well. But I think this one with the more touches might actually be better. So it's a bit subjective, right? But if we project that short-term target as a potential you know, move down in yields, you know, I wouldn't be surprised short-term if we head down to, let's say, the 2.5% level in the yields. And you know, I'm just curious to see. Yeah, so you know, that might head to about the 0.5 Fibonacci level for this sort of shorter-term move. And then if we use a more aggressive neckline and project that, let's say, down from here, that actually takes us to the 0.618. So, you know, short term, I wouldn't be surprised, you know, if yields sort of went a little bit lower. I also wouldn't be surprised that if the yield does break down short term, that we would see some of those growth equities, like the NASDAQ names, get a bit of a relief rally. You know, some of those growth names that are companies that are dependent on expectations of longer-term future cash flows, which, you know, in turn are dependent on you know, cheap money basically in the near term to fund those investments for longer-term you know, expected future cash flows, right? So some of those growth names and maybe tech stocks, I think, might catch a bid, you know, should a short-term move materialize here. And I think you might start seeing narratives of, you know, the bottom is in, you know, the yields have peaked, and the chart of truth is valid, and we're going to go head lower in the yields, and maybe might even start seeing things like, oh, the lockdowns in Asia are going to be resolved, and you know, we're hearing whisperings of that, and you know, we're going to go back to QE, right? And it's going to be up from here, and you know, could we have hit the bottom? I wouldn't be surprised if we start hearing headlines like that. And again, this is sort of like informed speculation, so I wouldn't definitely not take this as financial advice, but I'm sort of just curious what's going to happen in terms of that. But you know, based on the macro time frame, I don't think we've seen, you know, just personally, my opinion is that we haven't seen the top for yields yet. And then this is just illustrating sort of that as well. So the NASDAQ obviously has taken you know, a bit of a hit, right? So let's see, about 31% from the top there. But sort of starting last week, we saw the NASDAQ start catching a bit of a bid and make a slightly higher high and a gap up on the last trading day of last week, and close above that previous local high with a gap up. So I wouldn't be surprised if the NASDAQ caught a bid, you know, concurrent with this sort of action in the bond market and that sort of correlation with growth names. I wouldn't be surprised if we saw some short-term relief in the NASDAQ, which might carry over into crypto as well. But I'm not entirely convinced that we've seen the top for yields. So I think I've gone on long enough. And if you made it this far, thank you for watching and for your interest. Let me know, if you agree with me, if you disagree, and if you have any feedback on my analysis or my macro thesis, and good or bad. And I really appreciate that. And hope you enjoy your day or your holiday. And we will pick up from here next time. Thanks very much, and take care.